Alright, what's going on, man? We got a trade recap today for Monday, June 22nd, and took a loss this morning. So that means the set of 3 accounts are officially gone. And yeah, is what it is. That's part of the prop firm game. That's part of trading. But I made money on them, secured my return on investment, 3x my money in a month and a half time, month and a half span. 3x my money in a month and a half. So if you're going to try to pick an investment, like let's say you were trying to invest into the stock market, there is nowhere. Imagine getting 100% plus return on your investment in a month's time. Like, so, so that's how I'm thinking about it in terms of the prop firm ROI, but took in my opinion, another statistical loss this morning, and this is just part of the game, especially after you take that first initial payout. If you have a bit of a smaller buffer, which is what I had that 2-trade buffer after the first initial payout. Sometimes it just depends. You just have to be content with this scenario playing out. Sometimes you'll just build that buffer right back up on your next trade if it's a winner. But sometimes you might just take 2 consecutive losers, and it just happens to be whenever, right after that payout that you take, when you have a smaller buffer, and that's just a part of the prop firm game. But that's also why I preach to take the max payout whenever you're eligible, because you never know when something like this could happen. So regardless, let's get into the trade. I actually took 2 trades this morning. One was a break-even trade, pretty close to open, and then one was textbook loss in my opinion. We'll go over it and why I ended up putting risk on the table here. So the market opens here. First of all, coming into the market open, let me just pull up the daily bias real quick. It was the most textbook obvious long bias this morning. So I have no regrets about taking aggressive entries towards these highs here. This is what we look like coming to the market open, respecting this 1-hour gap. Making our way up to this daily buy side liquidity and all-time highs. I said, once again, easy long bias towards all-time highs. No shorts for me. There is no reason to be targeting shorts because literally if you just zoom out, we are within a, I don't know why this is a straight line now. We are within a this is a market maker buy model within a higher time frame market maker buy model. Everything is pointing to longs. We're basically at all-time highs. These lows were put in overnight. There's no reason to go revisit them. And if we expect the draw on liquidity to be higher, then we expect these higher time frame gaps to deliver us towards the draw on liquidity and to hold. The lows within these high time frame gaps ideally should not get revisited in this scenario. And this morning we just ended up coming up and edging the buy side liquidity, and we have now sold off. So everything was pointing towards longs this morning. Everything was telling me, hey, there's no reasons to go lower if my draw on liquidity is correct. So the first trade was pretty close off open. We were already holding this 1-hour gap, and I saw we had this 15-minute gap right here that we came down into off open, and I just wanted to see this 15-minute gap hold. We already kind of closed above these internal highs on the 15-minute chart. So we came back and rebalanced. That makes sense to a bullish 15-minute gap. I want to see this get respected to take aggressive longs towards buy side liquidity. And like I said, in a more of aggressive mindset this morning because everything was primed right when the market opened. So we came down, tapped into this 15-minute gap. We get beautiful displacement candles out of this 15-minute gap. 9:35. That's so 5 minutes into market open. I entered here, went long, break even at the internal high, and we come down and get break even. So I'm like, okay, I would normally expect us to just run to the buy side liquidity here, but I was still open to potentially going long, but if I were to go long, I would need higher time frame candles confirming the move higher, because I'm already zoomed into the 1 minute time frame. This move failed, so it's like, okay, let me zoom out. We're still holding this 15-minute gap. We, even after getting break even, we still hold this 15-minute gap, and then the next 15-minute candle opens up, and it's the most textbook candle. It closes above the previous wick. This is yeah, 5-minute close here, a 15-minute close below the previous candle wick. This is also the hourly close and the 4-hour candle close. And it's like, look at this chart, dude. Look at this chart. You're telling me after this 4-hour candle close, we're not going to come up and take the draw on liquidity? It's just crazy to me. And I actually put this in the Discord. But these are my thoughts, right? And I'm just going to read this out to you. Put it over here so you can see it. If you followed your rules and took a loss longing today, do not feel bad and don't let it get you down. Sometimes good losses happen. Nothing is 100% guaranteed in the marketplace, and as traders, we should be indifferent to the outcome of each individual trade. In my opinion, from my own way of trading and being aggressive long buys this morning, especially after the 15 1-hour, 4-hour candle close that I just showed you, is incredibly valid. Really surprised we don't take that high, and I would say 90% plus of the time that buy side liquidity gets taken. I think it's 95% plus of the time. So personally, I'd slap risk on the table 10 out of 10 times, because I know the odds are heavily in my favor, which is all that you can ask for as a trader, right? So you should be indifferent to the outcome of each individual trade, because you know that the probabilities are in your favor as long as you're following your rules. At least I know that the probabilities are in my favor because I have back tested data, I have forward tested data, I have proof of success. That when I follow my rules, and when my rules are followed and everything that I need to see occurs in the charts, I know that the probabilities are in my favor. So I would take this trade 10 times out of 10. And it's not like this was an emotional trade after getting break even. Like, no, I took the break even, I zoomed out, and I saw exactly what I needed to see in order to be taking another trade. This 15-minute candle close above the previous wick high confirms, in my eyes, the move higher towards the buy side liquidity. It's also 1-hour candle, 4-hour candle close. Like I said, 90+% of the time, this buy side liquidity is going to get taken. So at this point in time, after this 15-minute candle close, 1-hour candle close, I'm just placing a safe stop loss and a limit order where I'm content with the risk, and I'm just zoomed out. I don't really care what the 1-minute chart looks like at this point in time, because in my eyes, it's all just noise. My limit order was within, it ended up being within the these 1-minute gaps here. So I will zoom in when I'm placing a limit order to see, does it really make sense for us to retrace to that level and to hold it and then continue higher? Yes, it does. We have gaps down here. It makes sense to come down, rebalance to them, and nothing is wrong with the draw on liquidity, right? So I'm literally just playing a big safe stop loss in my eyes, just wanting to see the high time frame draw on liquidity guide price, not trying to get too cute about the scaling in, about catching the exact bottom of this move. Now, that being said, we did end up running through the gap, and we came all the way back down to the low, so my trade idea is invalidated at that point in time, and that's a good statistical loss, in my opinion. So like I said, this is something I would slap risk on 10 out of 10 times. I thought this first break-even trade was also good as well, being aggressive earlier on into the market open. It makes sense after rebalancing to this 15-minute gap, after getting this displacement candle, to go take for the move to happen right now. And good job of mitigating risk and going break even here. So yeah, man, really nothing to regret in my eyes about this trade. This is the most textbook statistical loss that I could take, in my opinion. The loss from last Friday, the market structure in itself is statistical, like a statistical loss for me. I just think the draw on liquidity that I was targeting, I'll just go to my trade journal real quick and pull it up real quick. I just think the problem with the Friday loss was the draw on liquidity that I was targeting because all the high time frames were bullish, right? It was going against a high time frame bias. I've already made a whole video on this, but it's like we don't where did I say this? Ultimately, the trade failed because of a lack of an A plus draw on liquidity. The market did not have to trade to those lows because the higher time frame model is bullish. So like just zooming out to the 1 hour chart, we don't have to go take these lows here because everything else is pointing us into the direction of longs. So although I'm still going to count that as a statistical loss because I think I had good reasons for my bias, but that's the reason that the trade that trade failed is because it wasn't necessarily an A++ draw on liquidity because it wasn't aligned with the higher time frame bias. Now, this morning was complete opposite, like literally everything was aligned. So I'm not going to yap on it too much, but because I feel like I've already said everything that I needed to say, and I've already taken a step back and reflected on this trade. This loss happened almost an hour and a half, 2 hours ago. So yeah, I took a step back, truly reflected. I've already journaled all my thoughts, and truly, I really feel like there's nothing to regret about this trade. I would literally slap heavy risk on this 10 out of 10 times. But like I said, with that 2 trade buffer, after taking the max payout on that set of 3 accounts, it just leaves you in a situation like this where you just have a smaller buffer, and you just have to be content with the possibility of blowing accounts and realizing that it's not the end of the world. Yes, I do hate trading evals. Trading evals aren't fun, but it's just a part of the game, right? The whole reason we use these prop firms is to leverage our money and the amount of capital that we're able to risk on a trade. Like I said, secured 2x, 3x my initial investment on these accounts, even though it was just one singular payout. Yeah, man. So that's the trade recap. Personally, I'm going to be buying these new sets of accounts with Alpha Futures. They are running a 40% discount for 24 hours. So it's literally only today. So actually kind of crazy timing for me. But they're running 40% off on all of their accounts. So I will be trading on Alpha after securing those. I'm not going to scale up to 5 yet. I want to get multiple payouts and become increasingly comfortable trading 3 accounts. I don't think there's any reason for me to scale up even further right now to 5 accounts. I want to take it a bit slower, not trying to rush the scaling process whatsoever. So I will be buying 3 accounts, 40% off on Alpha Futures. So good deals over there, and I will be trading those accounts starting tomorrow, and just looking to pass the evals once again, and just kind of restarting the process. But I think, like I said, it's just important to realize that this is a part of trading. And it's going to happen, right? The market doesn't care whether or not you have a smaller buffer on your accounts. There's always a possibility of losing 2 good trades back to back, and I feel like that's just what happened to me. It's a part of trading. So keeping a positive mindset, there's no reason to be down. Also, I mean, yeah, there's no reason to be down. You just got to treat it like a business, right? This is my business. This is Flow State Trades LLC. Like, prop firms are evals are a business expense, and the revenues come from following my rules and being disciplined, right? So I've already said this multiple times, but made good amount of profit on my previous business expense of these sets of 3 top step accounts. You can see 2 of them have already gone away. I don't know why this one is still open because the balance is negative 46. Maybe it's still technically, I don't know why it's still here, honestly. But yeah, that's all I gotta say. Not gonna yap too much. That's a losing trade for me. Nothing to regret. And like safe stop loss below this whole 15-minute candle, 150 point 15-minute candle. If my draw on liquidity is correct, price should not revisit down here before taking the high, and we just ended up not taking the high for whatever reason. Like I said, the market doesn't owe you anything, even if it is an A plus 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 trade, right? There's no such thing as 100% guarantee within the marketplace. Um, so trade recap for me. Appreciate you watching, man, and hopefully this is just good insight, good transparent insight for you. I feel like there's not a lot of people on YouTube, on trading social media, who are going to show you every single loss. It's no fun to come on here on YouTube and make these in-depth market trade recaps whenever you're losing, right? But this is what I do. That's the whole reason why I started this channel. Um, so that's what I'm gonna keep doing. So appreciate you watching, man. Let me know if you took a trade or not. Code FST on all your favorite prop firms if you want to take advantage of the alpha discounts, 40% off throughout the rest of the day today. Code FST. Links will be in the description below. And that's all I got. So I appreciate you watching, and I will see y'all tomorrow in tomorrow's market recap, ready to get after it again. All right. Peace.